Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. I hope you're having a fantastic weekend. What we'll just currently do is look at Bitcoin and check this out. It's up and down and all over the place. If we look from the halving, we can see the 2012 cycle, it took off, just really close to the halving date. And then for 2020, it took off a little bit later. For 2016, it took off later. Does that mean for the 2024 halving cycle, it's just going to take off later? The answer is, of course. Crypto is the most incredible asset class that's ever existed. Well, you can see from the 2012, the 2020, the 2016 cycles, we're getting lengthening cycles. So that means we're basically on track. We were following the 2016 cycle, but the trade wars came in and threw cold water on everything. Not a drama, we'll just get with the program a little bit later on. Looking through the crypto market, we can see that WIF has been dominating price action. It literally came up over 30%. Well done if you were holding WIF. Doge has been doing quite well as well, and XRP, look at XRP, it's just rocking and rolling. We've got a tight concentration of the other cryptos in this middle band, and the one that's doing the worst is the one that did the best in the past 24 hours, and that's BNB. If you're celebrating Valentine's Day, a happy Valentine's Day to you, and so many outpourings of love in the comments on X and the comments on YouTube. Just beautiful. Thank you so much, everyone. Now let's check out what happened to Bitcoin in the past 24 hours. We were here in the last video. This was the place that we were at. We said that we have to look forward to the 98,384 level. To get across there, we'll confirm bullish price momentum, and the 94,574 would confirm bearish price momentum. Now, what did we see? Gravitational pull around the 96,493 level. We had a bit of a push up until we reached that 98,384 and saw structural failure, negative structural attraction, but now the buyers have been starting to step in. As it's the weekend, we get a lot of drift across the weekend. Saturday can particularly be a little bit positive and Sunday can be a little bit negative. That's how it's gone on past weekends, but it doesn't mean that's how it's going to go now. We just watch the structure. What is the bullish case scenario? If we find that we're getting positive price momentum and challenging that 98,384, getting above it, we can start to challenge the 99,534 level. Now, if we go bearish, we first have to drop down below the 96,493, but there's a lot of structural support between 93,432 and 94,574. So we would expect, if it actually comes down here, to consolidate around. Now, why did we blow up here and why did we pull back there? The answer, of course, is in the same place that we always look, the cheat sheet. What I've done here is to invert Bitcoin's price momentum, so you can see the little number is at the top and the big number is at the bottom, which means an inverted scale. I'll just show you how to invert or uninvert. Okay, this is an inverted chart. Now, what we're looking at are the row ones. The row ones are the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. What have we noticed? They've all pulled back. Now, what did that do to the inverted price of Bitcoin? Well, it pulled the inverted price of Bitcoin back. But what did it do to the actual price of Bitcoin? It went the other way, because this is an inverse directional correlation. Now, what does that mean? It's pretty simple. As this one comes up, this one, for example, as the VIX is coming down, Bitcoin is rallying. As the dollar comes down, Bitcoin is rallying. As dollar yen comes down, Bitcoin is rallying. You get the idea. Now, we also know that Bitcoin absolutely went for it and it hit structural resistance and then it said, oh brother, I'm out of here. Looking into row 2 of the cheat sheet, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. what do we notice? Something really interesting. Look at this, check this out. Gold is deciding to tank down. It's brought silver, its best friend with it, and copper, its third wheel, is not far behind. Ah yes, friendships are difficult sometimes. So what are we noticing here? This pullback in gold, often we can see a pullback in gold, and it's later felt by Bitcoin. So just something to keep in mind. And why was it pulling back? Well, geopolitical tension is starting to resolve itself. Oh, not good for the gold bugs. Bring the conflict back. But we can actually see that confidence is getting restored into the main markets. That's what junk bonds mean. And it was decaying, and that brought Bitcoin with it. And where Bitcoin goes, guess what? The alts go as well. And we can see here some really interesting things. Look at the euro dollar, it's sold down into the close, and the Aussie dollar did the same thing. Bitcoin is picking up on this degree of weakness, but let's have a look at the futures. We can see that the S&P 500 has been going up and down, but it's basically moving in directional correlation with Bitcoin. The Dow is starting to just separate a little bit. You can see this big move up in Bitcoin right there. I'll just zoom out a little bit because it gives you a little bit more, a bit more understanding of what you're looking at. You can see that that area there on Bitcoin coincided with all that structural overhead resistance that we were just looking at in Bitcoin's chart. You can see also that the directional correlation has been playing out. Bitcoin was absolutely whacked recently because it pre-digested the CPI's moves. Bitcoin is a very risk-on or risk-off. It's very risk-sensitive. That's why we need to keep our eyes on the major indices. If you're just joining us for the first time, a very warm welcome, and please hit that subscribe button and join one of the best communities on YouTube. We have the most phenomenal people here inside our CTKS Global family. When we look at row 3, which are the major market indices, the S&P 500, the Nasdaq, the Dow, and the Russell. One thing that I wanted to show you here was the Russell. You can see all of this overhead structural resistance. There's an absolute bucket of it. Now, what happens when we get this overhead structural resistance? We consolidate. Remember how I was talking about Bitcoin? If it came down between certain levels, it was likely to consolidate. Often you'll think about, why the heck does something consolidate? I just don't get it. This is the reason. So the Russell is just consolidating at the current time. The Dow went from structural support into structural resistance, but since has decayed back. We can also note when we look structurally at the S&P 500, it came up through a structural level, got hit on the head by structure, went back to structure, went through that positive CTKS gap, and it's now consolidating around its current price, around that 61.14 level. Understanding where things can consolidate is a superpower, and we know ahead of price actually reaching those areas. Therefore, when we look at something like Bitcoin, we understand what the major market indices were doing, what crypto was doing, sniffing out the risk on or risk off activity. The markets are currently consolidating. They've had a fairly good bullish price momentum behind them. And of course, that's brought crypto up. What typically happens when we get negative price momentum, we get a retrace and we get consolidation, and then we seek to take out the resistance level. This is absolutely normal. So what are the two levels that we need to look at in terms of Bitcoin at the current time? The truthful answer, I can't tell you from Bitcoin's chart. I need to look at total crypto market cap, and you do too. Ken, you take all the fun out of it. All right, looking at total crypto market cap with our structural indicator on, we can see that there's a degree of structural overhead resistance and a degree of structural support playing in here, playing in there. Let's go back to Bitcoin. Okay, this is just superb. When we look at that overhead structure, the structural resistance in total crypto market cap, you note that total didn't have that structure. That was Bitcoin bringing down the total entire crypto market cap. And we see that total crypto market cap has resistance currently around that 97,536 mark. You remember that level there? That is coinciding around, you just say, the 96,493 mark. Okay, now we know our levels. Okay, what are they? 98,384 for a bullish case momentum, getting above that and staying above it. We got to stay above it. Just don't get above it, stay above it. And what about to the negative side, the 96,493? If we come down, we're going to find structural support right across the entire crypto market. How cool is that? We would expect a bounce up. Now, if we bounce up above that 97,536, we could well be on our way to 98,384 and beyond. Awesome. Kate and I wish you a beautiful weekend ahead, and don't forget, keep your structure in mind. It is the secret superpower that only our community has. Bye for now.